I'm Charlotte McLeod with the Investing News Network, and here today with me is David Erfle, editor and founder of Junior Miner Junky. Thank you so much for coming back to talk to me. Great to see you.
Great to see you too, Charlotte. Always a pleasure.
Yeah, so we have a lot to talk about. We're going to focus on what's going on with gold today. And where I thought we could begin is with sentiment, how people are feeling in the sector. So we're talking today, it's October 4th, and we are, the last time I checked, back above 1,700 per ounce. But the last couple of weeks have not been quite so bright. So what are you seeing in terms of sentiment right now?
Yeah, I mean, it's finally getting exciting here in our sector after basically six consecutive months of depression, bearishness, lower gold prices. Yeah, the gold price went down for 6 consecutive months, and there was a lot of depression, which, in this sector is a good thing because it's all about contrarianism in this sector. The more beaten down our sector becomes, the more the more bullish you need to become. I know it's difficult to be that way, but you really have to flip your emotions in this sector.
Yeah, and it is definitely difficult. I want to get your take on, because I know that you were just up in Beaver Creek at the event up there. I didn't get a chance to attend. What were your takeaways from that conference?
Well, first of all, it was just so great to catch up with all my Canadian colleagues and friends, and for the first time in a while. It's a beautiful venue, it's a beautiful setting. It was interesting. I was going there prepared to be a lot more depressed than I was. It all as far as the companies that I spoke with. It's all one-on-one meetings. And they do such a fantastic job there. Jessica and her team, they do such a fantastic job of facilitating the event. It all depended on which juniors you spoke with. If you spoke to an early stage junior that had that was de-risking a lower margin project, and maybe they recently made a discovery or they hadn't yet made a discovery and they were running out of cash, they were a little on the depressed side. But if you spoke with a junior that was controlled by a well-managed company that had been through this cycle before, they raised money at the right time. They still had a lot of cash. They were very optimistic and upbeat, and they were going business as usual. Maybe they were scaling back some drill programs to conserve cash, but they were more upbeat. So it all depended on who you talk to, really.
Yeah, I think that's definitely fair. And so the last time that we had a chance to speak, I believe that was back in March. And at the time, you said you're interested in, and I'm just going to make sure that I have this right here, you're interested in later stage junior developers at the feasibility stage, or those that were at or close to the financing phase. So as we stand today, is that still where your interest lies?
Yes, and especially so now because many of them got hit really badly because you had the gold price continuing to go lower while the cost to build their projects, to raise capital, to do whatever they needed to do to de-risk the project kept going higher. So these valuations have become really attractive. I built up a lot of cash back then. And even more recently, I put a lot of that cash into a short in the stock market near its peak in mid-August. So I've covered that short and did quite well. So I have even more cash now. And a lot of these companies look really attractive on this bounce here in the gold price. So I've added to a few of my positions. I'm looking at maybe adding one more, but I'm still keeping a large cash position because this is October and we do have an election here in the US coming up in about 5 weeks. And I expect the quarter to continue to be really volatile. So it's definitely going to be interesting.
Yeah, and definitely we'll talk about some of those bigger factors in the market. Sticking with the gold stocks for a minute, I was looking at an interesting piece that you wrote about a month ago. You're talking about this 7-year pattern where gold juniors hit significant bottoms.
Mhm.
So I wondered if you could tell me about that cycle, how we're seeing that play out right now.
Oh yeah, absolutely. It's really interesting how when the secular bull market started in 2001, it started with the famous brown bottom. That's when Gordon Brown of the UK sold most of the UK's gold below $300 an ounce, and gold double bottomed at 250. Well, the miners bottomed in 2001, and then it had a really nice run up into late 2007, early 2008. And of course, then we had the global financial crisis come in, and the gold stocks made another major bottom in 2008. And then anybody who purchased gold stocks in 2008 and held them for the next couple of years did very well indeed, because we had a blow off top in the first phase of the secular gold bull market, when it blew off at $1,925 an ounce, before after going below 700 during the financial crisis. So we had a major top there in 2011, and then lo and behold, we had of course, we had a really brutal bear market after that, because we had a decade climb in the HUI, went up 1,600% from 2001 to 2011. Then down to late 2015, where we had another major bottom in gold stocks. And that coincided with phase two of the gold bull market, because it corrected 50% down to $1,045. And then of course we had the strong move up into August of 2020. And now we've had a little bit over 2-year correction. Here we are in 2022, 7 years after 2015. And I believe we're in the process of making a significant bottom here in the mining sector.
Okay, yeah, it's always good to get that historical context. And so when it comes to the gold equities, we have an idea from your experience at the conference of which companies are feeling good. We know how you're positioning right now. Are there any other trends that you're seeing among the gold stocks right now that you think people might be missing or overlooking at the moment because of everything that's going on in the world?
Oh yeah, it's really interesting the way gold stocks have and especially silver have predicated this possible major bottom in the gold price. I mean, we had the SS Bear boat, SS Bear, pretty much overloaded to the gills with bears. I mean, I even saw some long-term bulls flip bearish here uh, early last week. And myself included. I was expecting the gold price to possibly go down to 1550, which is a 50% retracement after it had doubled from late 2015 to August 2020. The 50% retracement would be 1557. We had a quarterly close just below 1700, and I was possibly thinking that, hey, gold was we have to look out for that 1550 level now. I wasn't running out selling all my gold stocks, but I was preparing for that possibility psychologically, and still had a lot of cash, and that cash was in a short the S&P. But midweek last week, we had a major reversal in the gold price due to what was going on in the UK and the German bond market. And we had a huge reversal. Gold touched 1622, I think it was, and now we've reversed over $100 from that level here into Tuesday. And what that did was it got the gold price back above that 1675 level. That 1675 was like this Maginot line of support that the bulls had that were clinging to. It had tested it 4 or 5 times, and when it finally broke, it put a lot of people into the bear camp, so which overloaded the boat even farther. And that's what happens with the gold sector. It does this every single time there's a major bottom. You have a false move first to get everybody out of the bull boat, and then when most everybody's out, that's when it reverses. And it looks to be that the case here again, where the gold price is reversed from from below 1675, a false breakdown, and now it's well above 1700 here on Tuesday. And I'm looking for a possibility of a weekly close now above 1750 here this week. That would be really huge.
Yeah, that is definitely something that I wanted to cover because I know that you look at the gold price from a technical perspective, whereas, sometimes people are just looking at more external events. And we've heard a lot this year that the price activity, given all of the events going on in the world, doesn't really make sense for gold. But when you look at the charts over the course of this year, is it making sense to you?
Well, it is making sense in dollar price terms. If you look at the US dollar and its parabolic rise, I mean, that's been the main culprit for keeping the gold priced in dollars down. If you take a look at the gold price priced in British pounds, it's at an all-time high. If you look at it Canadian dollars, it's only down 3% this year. If you look at it Australian dollars, it's about the same. In euros, it's close to an all-time high. So, it all depends on where you live, but unfortunately, it's the U.S. dollar that is the world's reserve currency, and it's the U.S. dollar gold price that everyone goes by. And as far as the junior stocks are concerned, when you had everyone believing that the gold price was going to continue lower as the U.S. dollar continued higher, gold stocks got down to a point where the last time the GDX and the GDXJ were trading at this level, gold was below $1,300 an ounce. So the market was expecting gold to go well below even 1550, while the gold price has now reversed, and it's gotten us a little more excited in the bull camp here. So a lot of these juniors haven't really moved much with this move with a lot of volume. Some of them have. A couple of them, many of them have gone up double digits the last 2 days, but the volume still isn't there. So we need to get the gold price back above $1,800 to get the junior market really excited. And the one major gold stock I'm looking at is Newmont. Newmont Mining, that's the bellwether. That's the largest gold miner. That's what generalist investors look at. And when you have the largest gold stock on the planet, after reaching an all-time high, correct over 53% in 4 months, that gets a lot of people out of the sector. It sours a lot of people on the sector and remaining on the sidelines until it can regroup and get back up a certain level. And I think that level is $52. That's where it broke down. So once the Newmont gets above $52, I think that's going to get generalist investors back into the sector, which is what we need.
So do you think that Newmont at 52, gold at 1800, is that a feasible 2022 event?
Anything could happen here, in the last quarter. We've got geopolitical issues are really getting tense. The past few weeks, as far as what's going on with these central banks and the Federal Reserve raising these rates so fast, it's brought up the elephant in the room, which is the debt. The global debt of over 300 trillion. Most of that's in dollars, and it's more and more expensive to service. So it's putting a cramp, in a lot of these markets. So it's really going to be interesting how the gold price reacts now, because the dollar is now coming off after going up so parabolic move. I don't think that the rise in the U.S. dollar is over. I think it's just correcting. What I believe is going to happen is when the U.S. dollar starts to rise again, I think gold will go up with it as a crisis hedge. So let's wait and see what happens there. But the gold price is finally reacting as a crisis hedge, as it should be, and the gold stocks have a lot of catching up to do.
Yeah, that's right. And you've mentioned quite a number of issues that I think we've been keeping such a close eye on really for all of 2022. We've got the Fed, we've got other central banks, we've got the dollar, we've got geopolitical issues. What are you watching most closely? How do you sit down and figure out, what is actually important versus what might be more noise that we can set aside and not look at?
Well, the gold to GDX the gold to S&P ratio is something to really watch closely. And the gold silver ratio, now has collapsed, which is bullish for the gold price. Because when silver and the miners basically lead the gold price in both directions. If the gold price, if the miners and silver start to go higher, that usually leads to the gold price in both directions, and that's what's happening right now. Both silver and the miners are beginning to lead gold, which is very bullish. And the gold silver ratio now is getting down to that 80-to-1 level. That's a magic level. It gets below 80, and you're going to see momentum traders come back into this sector. And once you see the gold price get back above 1750, I think you're going to see momentum traders come back into this sector. And it's a very tiny sector. And once those momentum traders get in, that's when we start to see these strong moves, these stocks. But if you take a look at the gold to S&P ratio, it bottomed when the stock market peaked in the first week of the year. And it's been going higher ever since. So gold has been outperforming the S&P. And now we're starting to see the gold stocks start outperform the S&P. And we're seeing silver outperforming the S&P. So, gold price does well when you have stagflation. We have that. When you have loss of confidence in government, we're starting to see that. And when you have a loss of confidence in central banks, you're really starting to see that in the UK, as Liz Truss, who was just appointed less than a month ago, has already flipped as far as her policies are concerned. People are looking at, investors are looking at that, and they're going, and the reason why the U.S. stock market is bouncing so hard after being extreme oversold is people are, investors are expecting that the Fed is going to pivot now, that they're going to have to. There's rumors of Credit Suisse maybe going under, and all these things swirling with geopolitical concerns as well. So, all this is good for gold. The last thing I want to see is war being bullish for the gold price, but it is what it is. And I think that's what the gold price is sniffing out here after having yet another false move to the downside before it starts its next upward.
Yeah. Okay. And so mentioning silver, you said it's leading gold right now at the moment. Do you have exposure to silver? Are you looking for that? What is that like for you? Yes.
Yes, absolutely. I have a few silver equities that I own, and juniors that I own and that I cover in my newsletter. I like the silver juniors with the most exposure to the silver price, the optionality that they provide if they have a lot of silver in the ground. Then I like those stocks, and some of them are really beaten down here. So, that's the way you make money in this sector, really, is you buy fishing lines and you sell rhino horns. And there's a lot of fishing lines out there that you can buy, and they're trading as if these companies have no silver in the ground whatsoever, let alone multi-millions of ounces.
Right. And so I guess this is a good time. So we've talked about gold, we've talked about silver. Are there other sectors that you are also interested in at the moment?
Well, I do like copper, but I'm holding off on that to see what happens here. With central banks as they're destroying demand with these rate hikes. I think gold and silver are more attractive in this environment than copper, but I do have my eye on. I have a watch list with copper stocks on it, so I am watching those closely.
Yeah, I mean, copper, the question that I keep asking people is, we have all these recession concerns, whether it's globally at a particular country level. And we always hear that, copper is the bellwether for the economy. So is that a concern for you when it comes to copper? What does that mean?
Absolutely.
Yes.
Especially when you look at the chart, it doesn't, it looks like it could break down. But a lot of these copper juniors have already broken down. Many of them are trading at valuations where they're basically trading at perpetual warrant pricing. I don't even bother doing private placements anymore because A, I'm a U.S. investor and they made the rules draconian for us U.S. investors, and B is a lot of these juniors are already trading at perpetual warrant prices. I don't need warrants. When the valuation of these things is so low. And, you know, if they're helmed by the proper management teams and they have enough cash for the next 6 months, and, you know, if their valuation looks really attractive, then they're worth taking a chance on.
Okay, well, thank you for walking us through what's going on with the gold and silver and even copper stocks. I think that's everything from me, unless you had any final advice that you would share with investors as we're heading into, I guess it's now the final quarter of the year.
Yeah, just, you know, still be very careful out there. I know this is a very promising move we're having in the gold stocks, but you know, it's bouncing along. They're bouncing along with everything else. So we want to see the gold stocks continue to decouple from the stock market. So you know, be careful. You know, keep a nice size cash position still in October, because anything can happen.
Okay, well, thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is David Erfle with Junior Miner Junky.